Hey everyone, PK here. I'm going to tell you how to reduce your interest rate. I know everyone is struggling. We're not struggling, right? Like interest rates have gone up, and those of you who are new property investors, you put off your decision to buy your next property or even first property, right? Because interest rates are going up. But like experienced property investors don't do that. So I'll tell you how to actually reduce your interest rate, okay? And it's not a secret or anything, but this sort of, 2 or 3 or 4 steps will reduce your mortgage repayments, your interest repayments by literally tens of thousands of dollars over the course of many years and put hundreds of dollars back into your pocket right now, every single week.
Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you.
So let's say you have a home loan, let's just call it with CBA, the Commonwealth Bank of Australia. All right, so what you do is first of all, you make sure that it's a variable rate, okay? It's a fixed rate, you can't really do much, okay? It's a fixed rate, can't really do too much. If it's a variable rate, right, what you do is step 1, you just go online to your internet banking and figure out what is the rate you're actually getting. First of all, you figure out what interest rate you're getting. You need to know what your baseline is, right? So let's say you're getting 4.5%. 4.5%. Cool, that's fine. You're an established customer, so new customers are probably getting somewhere like high 3s or low 4s. New customers always get a better rate at basically every bank than existing customers. That's how they get new clients. That's how they tempt more people and get more business. Remember, banks are there to make money. The way they make money predominantly is by giving loans and earning interest. That's just how banking has worked for many centuries. So you figure out what interest rate you're actually getting, and once you know what interest rate you're getting, then you know what baseline you can negotiate off. Second step is it's kind of painful, but it doesn't take too long and it saves you thousands of dollars. You just pick up the phone, right? And you call the bank. And okay, it's all right, well, that doesn't make any sense. Well, what do you do next? You tell the bank that you want to leave, all right? So what I do normally is I call the bank up and I say, look, mate, right now I'm getting 4.5%, okay? I want to refinance my loan to another bank that is giving me 3.5%. I normally just go a whole percent less, okay? Regardless of whatever's going on in the market, I go a whole percent less. And I say, I want to get 3.5%. Can you issue me a loan discharge notice? This is very important. You have to tell them this. You need to ask them to issue you with a loan discharge notice. These 3 words are like magic, okay? These 3 words will save you tens of thousands of dollars in the long term, okay? A loan discharge notice, that means that you're officially asking them to basically can your loan, and you're going to take your business to another bank, regardless of whether you have talked to another bank or you're just making this stuff up, to be honest. That's what I do as well. And all of a sudden their ears perk up and they're like, oh my God, all right. Well, sir, let me see what I can do for you. And they normally put you on hold for a couple of minutes and pretend to, do stuff. Just like when you're buying a car and you're like, oh, I want this, I want a better deal. And they kind of say, I need to speak to my manager. But really they just go into another room and ruffle papers around and come back as if they spoke to a manager. That's what these people do, on the call. Right? You might need to hold for a while. They come back and they say, okay, well, we can give you 0.2% better or 0.3% better than what you currently have. We're not buying that. We're not stupid here, right? We're seasoned property investors. So what you need to do is say, look, that's just not acceptable. For me, I need that whole 1% less, to remain in your books, to remain as a customer in your books. That's when they'll really put you on hold and actually talk to their supervisor, actually talk to their manager. okay, you might need to be on hold for like 5 minutes or something, but it's well worth it. And that's when they'll come back. And I would say, like in my experience, I can only share my experience and perhaps the experience of my clients, probably 6 or 7 times out of 10, they will come back and actually give you that whole 1% less. Why are they doing that? It's because of something called net interest margin. Net interest margin is the margin or the difference that banks make in terms of the cost of them securing their funds and the cost that they pass on, or the revenue, the interest rate they get from loaning it to you. Their net interest margin right now is being squeezed. The cost of funds in global capital markets is going higher and higher. Of course, local interest rates are going higher, so they're making more money. But on a margin basis, on an average margin basis, what you find is in the last 5 years, the net interest margin is really eroding. So banks want your business, like they're desperate for your business, especially second-tier banks, third-tier banks, which are in no way higher risk than, your big 4 banks at all. But this strategy works with all banks. So that's all you do, and they come back and you've effectively just got a whole percent less in your interest repayments. Now, you might be lazy and think, I've already got a loan, I've already got 2 loans, 3 loans, I can't be bothered doing this. But seriously, I'm not getting anything out of it. You have to just spend 10, 15 minutes. First of all, internet banking, figure out your current rate, call them. You might be on hold for like 20 minutes, fine, right? But after that 20 minutes or 30-minute process, you've just saved yourself, like, let's say you've got a $500,000 loan, $400, $300 million loan, whatever it is, you're saving yourself tens of thousands of dollars over just a few years, but hundreds of dollars per week, right? Like, who wouldn't do that? And then all of a sudden, you've gone from being able to afford no more properties to being able to afford more investment properties. You've gone from being able to, not even afford one investment property to being able to afford that one investment property. So like my own experience across like 12 properties is that, I'm not just making this up, I swear to God. My interest rates, even though real interest rates, official cash rate has risen like, more than 2.5% in the last literally 6 months, my interest rate, the interest rate that I'm paying, hasn't risen more than 1%. Okay, so I'm beating the market by more than 50%, and that's just because every 3 months I'm employing this strategy. Now, of course, there's a limit to it, right? You can't just like keep going and get negative interest rate. Like, that's a bit silly. But take the principle from what I'm saying. If you're on the sidelines, not investing in property, because you're making your mind up based on what friends or family or the media is telling you, those people don't know these more intricate secrets. I'm reticent in even saying or calling it a secret because it sounds like it's some sort of esoteric truth. It's not. It's just uncommon sense. It's common sense, but it's uncommon. And that's how banks make money, because most people don't know these strategies. All right. So you should know these strategies, and you should be able to not only make money from property investment, but also save money through these methods so that you can build a portfolio which is larger and larger and larger. Yes, interest rates are rising. We've just had the most recent interest rate rise, which is 0.25%. So they'll probably not rise for too much longer, too much severity. But still, like, even when interest rates start plateauing and dropping and everyone piles back into the property market, what I've shared with you today, the sort of 2 to 3 step process of simple phone call, that saves you money. That, it could just be the difference between you getting that additional property, which in the next 10, 15 years doubles or triples in value, and all of a sudden you can retire, or all of a sudden you can live a life of, somewhat more comfort or luxury, or, all of a sudden one spouse, husband, wife, or whatever, they can stop working. Just these small decisions, they add up. People are really fearful of taking the next step in property investing because they don't know what the next step is. It's like, oh, all they see is retirement in 15 years, but so much contradictory information. There's so much misinformation. They don't want to be scammed. They don't want to be hurt. They don't know what the property market is going to do. You can't implement or action anything from that mindset. You need to break it down into what is the next step. So what is the next step for you in your property investing? I don't care if how many properties you have or like what's going on. The very next step is just call your bank, get that interest rate down, and take your very next step, because then you all of a sudden you've got more money in your pocket. I hope this was valuable, guys, and do it. Like, don't just sit on the sidelines, just please do it, because in 20 years time, you know, you'll kind of be kicking yourself that, oh, there's this random guy on PK who was talking about some stuff. I thought it was like useless, I didn't do it. But if you actually implement stuff that I'm telling you for free, right? Like, you'll make money. Like, seriously, you'll make money. Let me know what you think. My name's PK, guys. I'll see you next time. Catch you later. Bye.